Good morning, guys, and welcome to a full transparency trading session. I got about 14 minutes before I work out. I'm not going to spend all that time doing this, but we're going to go over a chart really quickly. We'll use MNQ because it is a little less important to my overall strategy than NQ is. So I already got my trade set up on NQ, as you see there. We're not going to go over my trades right now. We're currently up $120, 100% on the day. And we're going to look at the weekly. I'm going to remove all of this stuff so that you can clearly see the charts. And we're going to look back at the past because this is a very important day in the market. We have a lot of information going on today. We'll start out with the red folder information. As you can see, we have non-farm payroll, we have advanced GDP, we have the federal funds rate, we got the FOMC statements, we have FOMC press conference. All of this going on today, and this is at 2 o'clock in the afternoon, 2:30 in the afternoon, and then post market. Like today's about to be wild, y'all. It's about to be the wild west for real. Post market, we got Microsoft and Meta. Then you flip over to tomorrow, and at post market, we got Apple and Amazon. It's about to go down. Oh, it's about to go down. It's gonna be so dope in the next day or two in the marketplace. It's gonna be super volatile, so much fun. Micro's going crazy, minis going super crazy. Get ready for it, y'all. It's gonna be nice. The two big dogs being Microsoft and Meta. Uh, Estimated revenues of 73.84 billion and 44.84 billion. And then you got big boys like Amazon coming in at 162 billion and 89.1 billion for Apple, both post market as well. So not only does this affect what's happening today with all of the red folder news, but when you go into tomorrow, all of that earnings that happened overnight is going to hit us in the morning on Thursday. So today's going to be wild. Thursday morning is going to be wild. Then late Thursday afternoon is going to be wild. And then Friday is going to be wild. So for the next 3 days, if you are locked in, you're going to make a killing. And you need to get locked in. You need to understand that the ranges are still in play. Even with all of this information, even with all of the news and all of the information that's going to be coming our way, the ranges are still in play. The ranges are still very important. We're not just going to sit here and massively violate ranges. We might go to the top of a range. We might go to the bottom of a range. And currently, the reason why I took this away is we want to look at historical data. We're going to the weekly time frame, and it's the last couple of days of July leading up into August that we're looking at right now, right? So we want to see how next month normally plays out. So to do that, we go back here, and as you can see, beginning of July, we are trending down. End of July, we are trending down. Kind of like we're doing currently, but we're in a historical market right now where we've been trending up for a while. But then August turns it right back around and goes back up. So August usually continues for a bit, hits the support level, and then goes back up, which is something that we could see today. Looking at a support level right here, like 672, 672, right? Then goes up. September trails off. October starts to clean it up, and then we start the new year. Let's go back even further to the previous year before that. As you can see, with end of July, we were going up. August finished that pushing up. The last week started pulling down. August continued whatever the end of July was doing in this particular week as well. We're going to go back again to another one. Here's another August. Where's the end of July? Last week of July is right here. It was trending up. August finished that. Kind of consolidated, then pulled back towards the middle, and then finished that trend up as we were heading into September. And then that's it as far as the historical data. We have one more time right here where July we were going up, we pulled back, we were going up, we were going up. So August tends to continue whatever was going on in that last week of July for its first couple of weeks, and then do whatever it's going to do from that point. So we're looking for a continuation off of these last couple of days of August, and that's what I want to see. I want to see these last couple of days of August strike this continuation to see where we're going. Right now we are trending down. If we continue this trend down, then that means August could do the same. And for the first couple weeks of August, we could see ourselves pulling back, which we actually do need to pull back a little bit, but we're currently doing it today. So I could see today working out like this. Let's go to the 15-minute time frame and refresh that. I could see today pulling back down to the support levels of like 300 or the 400 area again, getting us back down into this range right here. 300 would be prime. 300 would be absolutely friggin' amazing. Which I'm gonna place a trade there, just in case. But I'm gonna place it on minis. You know, but with all of that news and everything that's going on, expect a very, very, very volatile market for the next couple of days, which is perfect news for the retail trader and day traders as a whole, or people who do high level analysis of the market. You can make a lot of money while risking a very small amount. I'll show you guys my risk settings over here. My risk settings are $150 to $1,000. Why that is because I am a very, 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 my maximum positions that I'm allowed is 5 right now, and 50 micros. It's super dope. 50 micros is crazy, by the way, y'all. I'm a very tight analysis trader. So like I make my analysis 100% based off of the 4-hour time frame and the 4-hour time frame and the 1-hour time frame is where I make all my analysis from. And I actually need to, what is this, micros? I actually need to draw this chart out right now. Put this right here, pull it to right there. 50% of the way right here. We're gonna draw the blue line, and then we're gonna go down to the hourly and use the hourly to clean it up. So there's gonna be a blue line right here, 6:15. And then we're going to have another one right here at 6:40. Close enough. And then we're going to take our daily, and we're going to stretch this out on the daily. We're going to take our weekly, stretch it out on the weekly, and then we're just going to leave it right there. Going forward into the future, this is a very important zone. We'll shrink it and grow it as necessary as the time goes forward. But right now, this is the current zone that we have. 1, 2, 3, 4, 5 are the levels. And we're going to take advantage of that going forward. You look at the 15-minute time frame and squeeze it into it. You see that we literally hit, I marked these out without even looking at them because it always plays out like this. We literally hit this blue line at 25, and then that sent us down. So being in a downtrend right now, a heavy downtrend, and not being able to get back up to this resistance is very, very important. That's my alarm. That means that it's time for me to work out. Yeah, my alarm is set fast or whatever because I like to just roll out of bed and get to it. So I'm going to go work out. Listen, I'll check you guys out later on. The trend is down for right now. We're still trending down. I think the market needs to pull back a little bit more in order to get ready for what's about to happen at the end of the day. We couldn't start out at a historical high, and then go historically higher. Like we are currently sitting at, refresh this page real quick. We are currently sitting at 639. We made it all the way up to 638.68, which is the highest that it's ever been. Now, the thing is, pre-market, we were at 639. Pre-market, we were at 639. Once the market opened up, we were already down, and I'll show you why we're at 639. So here we were at 9:30 in the morning when the market opened. We were already up here, and the market jumped to this point right there. So we were already at 639 pre-market, but unfortunately, the options traders didn't get to experience that. But you did get to experience a beautiful push down off of that high there or whatever. Actually, no. This is correct because ES never caught up. Let me go over here to my thing real quick before I go. ES never caught up. So yeah, ES never quite caught up to what we did over on NQ that particular day. Boom. ES made it up to right there at 2:30 in the morning, whereas NQ did this right here and wicked all the way up. So ES never quite made it to NQ. ES started from like this point right here and stopped. So QQQ has been higher, and ES and SPY have not. As you can see, we're up a dollar on QQQ, but y'all know the motto. Listen, take the easy money. I like to keep my schedule or whatever. I'm in the 5 a.m. club, so I got to get my workout in. I got 4 minutes to get myself centered, and then I'm going to meditate. I'm going to write my journal. That's a great way to keep you guys focused in this trading space. I'm building up my $150,000 account to catch up with my other accounts so that I can copy trade it without having to worry about risk settings and stuff like that. But Y'all know the motto, take the easy money. If you see green and take green, you will stay green. Okay, it's all about risk management at the end of the day, and controlling your psychology. Those are the single most important things. I'll tell you the 5 P's really quickly. It is going to be practice, so that you can create a process, so that you can grow your patience, so that you can control the psychology, and then you can have profitability. Those are the 5 P's of day trading. I'll check y'all out in the next video. This has been another Full Transparency Trading Session, where I'm your host, Sebastian, and I'm out.